If you take a look at performance right now, they've actually been doing pretty well. You have your top five up there. Up in charge is Momentum with a nearly 17% year-to-date gain. Multi-factor not too far behind. And you add it all together, and actually billions of dollars have been flowing into these Quant-Factor funds.
So let's talk about this story with Bloomberg's Isabelle, who's been writing about it. What is driving this rally? I see momentum and I see size, and I think big tech.
Definitely. It's really performance, and this is a stark turnaround from last year. So of the 13 long-short styles that Bloomberg tracks last year, only two were in the green. And now this year-to-date, only two are in the red. So it's really a good performance, and it's because we have market conditions that have steadied. I mean, Wall Street has largely made peace with the fact that interest rates will stay elevated for a longer period of time, and it doesn't help that the stock market just keeps on rallying and rallying. And also on the flip side of that, yes, there is big tech, but a lot of people pile into smart beta because it doesn't have big tech, so they use it to diversify and hedge their portfolios.
And so we're talking about these massive inflows that we're seeing into the space. Who's driving that? Is that the institutional type players, the professional money managers? Are we talking about mom and pop, for example?
Some retail traders are driving it, and we've seen around 48 billion pile into this equity ETFs, and it's really a stark contrast from last year, and we're on pace to beat 2023. And we have BI's Athanasios Serafegis saying that of the 900 ETFs that are tracking smart beta, 600 do not have big tech. So this is really their bit to diversify. I mean, smart beta equals quant equals factor. It's a cheap way to get into those trades. As we know, these styles are usually reserved for hedge funds and they're pricier. So this is a cheap entry, which is why we all love ETFs.
I'm so glad you mentioned earlier about the current market conditions, how things are really calm, and you just have this market that relentlessly goes higher. What is the correlation between that and demand for these smart beta or quant ETFs? Meaning, if we get volatility, how's that going to shake out?
If we get volatility, then smart beta demand will be a little bit less. But I think it's also hard to compare because last year markets were good, but then we saw demand wane a little bit. So I think it's really the confusion around it. And now it's really more that, okay, maybe interest rates will stay high for longer. Powell didn't say anything new. Maybe we'll see a rate cut later this year. So it's really more sentiment as well, and not just really whether market goes up or whether market goes down.